did markets sell off 500 points yesterday at the end of the day? Last half an hour. Was it on fundamentals? No. How shall I try to explain this? It's the trading vocabulary words. If you want to think about it, you remember back, in English classes way back in the day. I mean, it's more back when you were in elementary school and junior high. You had your vocab list, right? And you had to study your vocabulary words, and you had to write it down, write the definition, had to be able to spell them properly as well. Well, you had a lot of these Wall Street computers, these algorithmic traders that take in vocab words coming from the Fed, coming from the Treasury Secretary, boop, boop, beep, boop, 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 translate them, goes into the computer, and out pops a trade. Could be right, could be wrong, doesn't matter. Doesn't make any difference. It gets momentum going in one direction. And late yesterday, people are like, what happened? Turned my head, market was down 500 points. Well, that was the direction. That was momentum. It wasn't even a lot of volume, for crying out loud. And it was all about Janet Yellen saying that no talks in regards to backstopping deposits in all the banks around the country. Okay. That went over like a lead balloon. Crash, bang, boom. But Janet Yellen, in her defense, was speaking in front of Congress. She doesn't have any authority to do that. They don't have the authority. Congress has to authorize something like that. She can't do it all by her lonesome. So anyway, okay, this is what happens. This is what drove the markets down. Again, people, this is why you have to be very, very careful with short-term movements in the markets. It is a surefire way of getting your head chopped off, trying to guess what's going to happen next. As far as the statements from the Fed, listen to the interview yesterday. Yeah, sounds like he's kind of calling it a day. Sounds like, they're about ready to call it a day. Some of the language has most certainly changed in their statement. And door is still open to another quarter basis point hike, but we're most certainly closer to the end than the beginning. What's that mean? Well, you got people clamoring for the Fed to lower interest rates later on this year. Quite frankly, I'm hoping that's not the case. I do think that money is priced pretty fair right now. I do. I think it's pretty fair at these levels. And I do think that we need to break that cycle. The cycle of Fed-driven run-ups and, Fed deciding things are too hot. We have to break everything and send everything crumbling down. The Fed should just be worried about the value of money as a tool, as a measurement tool, because that's in essence what money is, and sound money. And when the Federal Reserve goes on these stimulus cycles where they lower rates and they make money really, really cheap, bad things happen every single time. Bad things happen every single time. Something will get screwed up. They've got to react to it. Crash, bang, boom. Again, why do we continue to do this? Why, we need a complete reset for the Federal Reserve. They got to get rid of their employment mandate. Just get rid of that. Just get rid of that. That's not something you should be dealing with. And you shouldn't be tinkering around with rates based upon the unemployment numbers. Let's be honest here. That has more to do with government regulations and issues within states than it does with any of your monetary policy. So what happens? You make money really, really cheap. And what do? We flood bad companies with all sorts of cash. So they hire people for a while. The company's a fugazi. Company goes under. Well, jobs are going to go away. Again, an economy that's built on a solid foundation rather than cheap funds. Much better way to go. Watchdog on WallStreet.com.